All right, welcome everyone. Welcome to today's episode of Market Wrap. Lots to unpack in this episode from the US tariffs to we had RBI's announcements and we also had a slew of results. Let's start from the top. What is the outlook on the market right now, sir?
Yeah, hi, good evening, Vishu. So I think last 4, 5 weeks we are seeing volatility in the markets, and I think the volatility is expected to sort of prevail given the fact that we don't have enough clarity on the tariff front. Although in this process markets are sort of oversold, so any kind of a positive trigger or news can lead to some pullback in the market. Good part is that markets have held the support of 24,500 for the past 3 months. But overall sense is that in case further weakness happens, because what we have seen on Thursday, market tried to sort of bounce back, but there was no follow up. So again, I think so, which is why I'm keeping the support bit notch lower at 24,200. And in case if we get a pullback somewhere down the line, 25,000 levels could be very much a possibility. And I think pullback, why we are sort of expecting is that Nifty has been able to maintain this gap area made between mid-May. That was around 24,164 to some 378 kind of a levels. The other is that markets have not closed negative more than 5 consecutive weeks since COVID lows. And yes, market breadth also is sort of quite weaker. And so that is also sort of giving us an ample buying opportunity. And again, I think a lot will depend on whether we see a truce deal between Russia and Ukraine, and development of bilateral trade again remains the key. So again, it's a sort of a more of a wait and watch situation. But I think I'll not be surprised if any positive news triggers a pullback in the market.
Absolutely, sir. We also had RBI coming up with the data and it kept broadly things unchanged. But what did you take out of it?
Yes, Vishu. So overall policy was unexpected lines. They've kept the repo rate unchanged at 5.5, and the policy stance has been sort of maintained at neutral. Good part is that they've maintained the growth forecast for GDP at about 6.5% for FY26. And positives were they've lowered the inflation trajectory for FY26 to about 3.1% from earlier 3.7 odd percent. And while they have introduced next year Q1 inflation at about 4.9, so we should read it from the perspective that this year we are going to maintain a pretty or make a pretty low base. So on those low base, 4.9% kind of inflation is not negative. And I think overall, I think the RBI policy again sort of highlighted that there could be limited scope for rate cut. And I think so. I think overall, the policy is in a sort of a pause mode. Now, coming to the bank perspective, we have seen 100 bips kind of a cut in rates. We have already seen margin pressure in Q1. Q2 again, we will witness margin pressure. And in case of 25 bips would have been cut, then possibly some more margin pressure was anticipated. So I think that is now ruled off. And I think overall credit growth is expected to be about 11 to 12 odd percent. So overall, I think favorable policy, no major changes or tinkering has been done.
Right, absolutely, sir. And finally, coming to the big news of the day, which is the US tariffs. Of course, there was initially 25% was being implemented, and now there's talk of 50%. What do you think about it?
So Vishu, I think tariff is something which is going to take some more time to sort of evolve. But whatever we've seen up till now, yes, this additional 25% tariff on India for continued purchase of Russian oil is sort of a negative. And I think since it is going to take effect in 3 weeks, so it is very much possible that there could be some discussion or dialogue in between. And obviously, these tariffs are higher compared to other competing geographies. So Brazil has 50%, Canada about 35, China again expected to be renegotiated at 30 odd percent. Now, I just want to sort of highlight is that while a lot of noise is going on related to tariff, but Indian economy is largely domestic driven in nature, and barely 10% of the Nifty 500 companies is revenue is driven by exports. So of the overall export, US is about 20 odd percent. As a percentage to GDP, it's about 2 odd percent. And even for Nifty 500 companies, I think if you look at US exposure is quite less. So from that perspective, we don't really see a need to sort of press the panic button in the market. Most of your big players will not be sort of impacted. So I think sectors which are impacted the most are obviously textiles, gems and jewelry, leather. No doubt, some of these sectors are large employers, but I think a lot of sectors like say pharmaceutical, like electronics and IT, I think are not impacted. So coming specific to some of the segments like say textile, now textile you will have 50% plus kind of a tariff. And obviously you have competing textile exporting countries like say Bangladesh and Vietnam, where the tariff is lower, even Pakistan. And I think we are slightly less competitive compared to China also, but China obviously can get renegotiated. So textile, it is clearly sort of negative, but all is not lost because you can't really change the vendor overnight. So somewhere down the line, yes, there are reactions, but I don't think that you can change because vendor empanelment itself takes 1.5 years. Similarly, on the gems and jewelry, while we do limited value addition, there a sector that has 30% of its revenues from US, and obviously it will get impacted. We also need to see whether companies look at other locations for exporting to US. Some of the players are looking at. And I think some of the sectors which are not going to be impacted is again pharma, because your 40% of the US generic demand is catered by us. We really do not have alternates besides China. And China is not very keen on exporting generics. Auto component, yes, while 25% universal tariff was there for all the nations, this additional 25% could put some impact. But then again, I think it also remains to be seen if companies have plants in US, then the challenge or the overall impact may be lesser. And IT, I think the biggest service export category, I think nothing much changes. It is out of the purview. So our sense is that the US tariff presents a near-term challenge for the few sectors and markets. But on the broader economic aspect, I think Indian economy or Indian equity markets are not so linked with what happens in US and largely driven more by domestic driven economy. So I don't see a need to sort of press the panic button yet.
Absolutely, sir. Sir, lots of results have come. The markets are right now not the most overvalued they have been. Which stocks do you think right now are available at a bargain?
So yes, Vishu, the result season is coming to an end, but there are some companies which have come out with a good set of numbers, and I would call them as attractive large caps. So one again is since there is a market volatility, so FMCG stocks are preferred. So I would want to sort of recommend say ITC with a target price of 525. I think good part for this company is that this is trading at about 22 times FY27, so valuations are inexpensive. When we look at the core business, which is cigarette, it is doing better at 6% kind of a volume growth versus 4 to 5% previous quarters. FMCG business is also sort of doing okay at 5%. Now, company had witnessed margin pressure largely because some of the input prices have gone up, especially on the agri side. And our sense is that even the tobacco leaf prices had gone up. So all of them is expected to sort of recede in the coming quarter. So that will also lead to margin recovery. So ITC looks good to us. Another consumption stock is Titan. Now, Titan again came out with a good set of numbers, about 21% kind of a growth. And we have seen jewelry segment, which is the core, doing 17%. And then you had watches and other business doing very well with a double-digit kind of a growth. So overall, this is another company which looks good to us because most of the segments have done well, in even in terms of margin. Now Q2 might be slightly lower because of the high base, but overall sense is that in the festive season things will be a lot more better. Again, US does not impact much, contributes only 2% of the revenues. And I think they have also looking to acquire a company in Gulf region. So there the tariff rate is about 10 odd percent. So that is another stock I like. Bharti Airtel is another stock because the company came out with pretty good set of numbers. We have a target price of 2,250. Now, company is doing relatively better compared to Jio because their ARPU growth is about 2 odd percent. Jio was about 1 odd percent. They are doing a lot more better in terms of 4G, 5G subscriber addition. They are also sort of doing a good amount of subscriber addition in the postpaid category, and which is why overall their numbers are quite good. And I think a lot of triggers we see. One, I think the peak of the capex for 5G is sort of behind us, and which is why the company has been able to reduce their debt by nearly 13,000 odd crores to about 1.25 lakh crores. And I think this will keep on sort of accelerating. The other thing is that there are some triggers in terms of we all know that data center business is a very attractive opportunity. They are expecting two to three times revenue, and before they go into public, payment bank where they'll have to go in for a listing in the next 2 3 years. And then you have Airtel Money, which has got a business of nearly $1 billion in Africa. And there also the company is intending to come up with an IPO. So that looks good to us. Some more stocks, Vishnu. So Siemens Energy. Why we are liking this is that I have been already talking about that. I'm liking this power transmission and distribution space for quite some time. I think this company came out with a pretty good set of numbers. Revenues were up 20%, about 80% jump in the bottom line, and we've seen a good amount of margin expansion. And order inflows have also been good. And I think overall, this company is also sort of doing decent amount of capex to sort of, so 280 crore is the kind of a capex what they've announced. In addition to that, also last 2 years they've been spending. And I think, again, order inflows or 1.6 lakh crore worth of order were awarded in FY25. 1 lakh crore plus is very much possible in subsequent years also. So we expect this company delivering 27% kind of a both the top line and bottom line growth. And I think if I have to sort of add some more, because pharma is another sector where things have been sort of a bit volatile, but DVs is something which we are liking. I think company revenues were up 14 odd percent. And the generic business is under pressure, which the company is saying that in the subsequent quarters, I think that is where things will improve. Why we are liking DVs is again, overall the company is looking to do a spend of nearly 650 to 700 crores in the next 2 3 years, and which will again improve the outlook for this company from FY28 and beyond. And they're not sensing much of a challenge from the tariff perspective. So that is another one. And if I have to sort of add last one, that will be Bajaj Auto. Numbers were sort of muted or probably stay flattish. But why we are liking this is again, margin profile is good. Company is doing very well on the EV front. Now they are 20% of the revenues coming from the EV side. In two wheelers, they are already sort of improved their market share from 12% to 21%. Now, e-rickshaw is something which they are sort of venturing into. So that was the last segment which was left, and which is why we like Bajaj Auto with a target price of 9,500.
Right. That's actually a bunch of attractive large caps. Sir, what about defense? I think there was also another news around government clearing another set of proposals for acquisition.
Oh yes, I think Vishu, in defense, the government has cleared a proposal worth 67,000 crores. Now, with this number, the acceptance of necessity has improved to about 11.2 lakh crore. And so 3.5 years, you have seen a pretty heavy acceptance of necessity. And again, this what we have done historically in 10 years is about 8.5 lakh crores. So yes, this has been very positive, and I think biggest beneficiary would be Bharat Electronics because they supply electronic systems, subsystems like radars, and for UAVs, especially male ones, I think production is expected to happen by an Indian company with HL or Solar Industries could be there. Astra Microwave again provides radar or a prediction of air defense system. Data Pattern is another beneficiary because they are the only suppliers of fire control system for BrahMos. And I think since defense has already done well in terms of price performance and now consolidating, So which is why we are selective in terms of stocks. I think HAL with a target price of 6,100 looks good. Bharat Electronics is a very steady performer with a target price of 530, and Astra Microwave at a target price of 1,270 is looking good. Besides that, Midhani also looks attractive to us.
Absolutely. Finally, coming to the last segment, while we did get a bunch of attractive large caps and then a few defense picks, what will be the hidden gem of this week?
So Vishu, I would want to recommend Nagarjuna Construction Company (NCC) with a target price of 275. Now coming to results, there was a weak performance. We've seen revenue down being about 7 odd percent, and because the ramp ups were lower, EBITDA margins were about 9%, so again down about 30 bips. But why we are liking is that the guidance side things have been pretty good. Company's order book is about 61,000 odd crores, and they are expecting healthy order inflow of nearly 22 to 25,000 odd crore this year for the rest of the year, and they are L1 in some 5 to 6,000 odd crores. And I think company is guiding for about 10% kind of a revenue growth given this healthy pipeline and order backlog. And largely, most of the orders are on the building and the transportation side. So we expect a sharp pickup in execution in the second half. I think EBITDA margins are also expected to inch up to 9 to 9 quarter, which is what the company has guided. So I think second half, when things sort of normalize for a lot of these construction related activities, I think NCC should be a beneficiary of this. It already has a strong order book. Execution is expected to be faster. And mind you, all these segments also are interest rate sensitive segments as well. So which is why I'm recommending this with a target price of 275.
Absolutely. Well, that was it for this week. Thank you so much, Pankaj sir, for your time and insights. And thank you so much, everyone, for watching. If you have any questions, please put them down in the comments and we'll try to get back to you. Once again, thank you.
Thank you so much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.